by the end of this video, you guys are going to be able to learn the 4 common trading myths that could actually slow down your trading progress and costing you a lot of money. And I want you guys to make sure that you guys will stay until the end, because these insights might be just what you need to improve your profitability. One of the first common myth when it comes to trading is you need to be constantly trading to make money. You need to be trading every hour, every second, every minute, looking for a setup, taking an entry immediately. I want you guys to stop with that mindset, okay? Because you guys should understand that trading is the only profession out there that pays you the most if you're actually very, very patient. Because a lot of traders actually think that frequent trading can actually lead to higher profits. But you guys should remember that frequent trading can hinder down your emotional decision making, which can actually eat up your profits. Remember this, guys. Patience often pays off more than constant activity in the market. Now, an example for this one is I want you guys to be focusing onto the specific candle right here. A lot of people will probably think that once they saw this big candle, they're like, wait, I want to find a setup. They go to the H1. When they go to the H1, they're like, wait, the next setup for a buy is going to be all the way down here. And then the next setup for a sell is maybe, let's just say all the way up here, for example. But you're like, wait, I want to be taking a setup right now. So you just keep forcing yourself to be jumping down on multiple time frames. Maybe you're coming from the 30 minutes and you're like, wait, I really want to trade. You go to the 15, you go to the 5, and then you go to the 1 minute and you said like, hey, I really want to be trading. And you tell yourself, you're like, okay, the market context, the overall structure of the market is obviously bullish, right? Market is going up. There's going to be a pullback. So you just jump to the 1 minute, and what do you see in the 1 minute? You're like, wait, I saw a really simple change of character. I want to be taking this entry here. I want to set my entry market fill around this level, like that, yada yada, and the market will play out. And then you get some bullish reaction. You get stopped out, right? And then once you get stopped out, you would look into this one. You're like, wait, why did I get stopped out? I know market is gonna pump over here. I'm just gonna wait. Like, you go over your line chart and you see a simple breakout, and you tell yourself, okay, there's gonna be another level to buy, right? I want to be buying again. You get stopped out. Instead of waiting for a really suitable area to be longing, like all the way to these lows, you instead just started to keep over trading to the point that when the perfect setup where everything makes sense to your trading strategy is all the way down here, you already lost a lot of profits over here. You already lost around 2 RR over here. And we didn't even take into context about emotional decision making yet, because maybe you would get so emotional you'd be risking 2R to be making your previous losses. So that's why that myth that you need to be constantly trading to be making money in the market is actually a horrible idea that you guys should have. By the way, you guys don't want to be missing out onto the last myth, because that's actually the biggest misconception that a lot of people are actually losing out on profitability, because you got to be doing that myth every time. By the way, guys, if you think number 1 was actually making a lot of sense, make sure you guys stay until the end, because the 4th one will actually make you realize that, wow, that myth actually makes sense, that I should stop doing that. Okay, so now we're gonna be moving on to the second myth, which is you must catch market tops and bottoms to actually succeed in trading. That's gonna be one of the biggest misconceptions every single time, that people should be having the most perfect entries, people should have the most perfect exits in the market. Okay, and I want you guys to understand that that trading myth is actually the worst. Okay, that's the worst idea that you guys should be having every single time that you guys are going to be trading. Well, because when it comes to trading, I don't want you to be focusing onto the next big winning trade, okay? Like I always say every single time, that you guys don't want to be having a single trade that will change your life. The one you want to be focusing is the next 100 trades, okay? Because if you're hoping that one single trade can change your entire life, you're not trading anymore. You're actually gambling, okay? And remember, trading is a game of consistency. Slow compound gains that would lead to a bigger amount of gains in a span of months, years. Okay, so now this second myth right here, where you must be catching market tops and bottoms to actually succeed, is actually a horrible idea to have. Because if you guys are trying to buy at the very bottom or sell at the exact top of the market, it's actually very unrealistic and very stressful. Because you guys should remember that consistent gains are much more achievable by focusing on the middle of the trends rather than the perfect timing for exits and entries. Because now let's try to pay attention over here. Okay, I'll be providing you guys a very simple explanation of the market. So now looking into the charts right now, I want you guys to be focusing on what you're actually seeing over here. A lot of people, remember what they mentioned a while ago about catching the perfect tops and bottoms, okay? Let's say that you found yourself a perfect entry just around this level, okay? You have a perfect entry around this level. Maybe your stop loss was a little bit too big. And then you told yourself, you're like, hey, market is reaching all-time highs. So that means that there's really a high chance that we can probably see 3,000. Okay, because market, there's no pretty good psychological level. We can probably hit 3,000 for like, what's this? 245 pips gain, okay? Or maybe a 2,405 pips gain. And you tell yourself, you're like, hey, I'm very optimistic that we can really reach around this level, okay? Because gold is reaching all-time high and I'm going to be targeting that. Like, I don't care what everybody says, but that's a really good psychological level where I really believe a lot of quote-unquote institutions will enter there for a big sell-off, right? Now, this is you already expecting to have the most perfect exit in the market and the most perfect entry. So look what happens instead is you're like playing the whole chart up and you're like, okay guys, this is playing very, very good over here. I'm very excited. Boom, you get hit on SL. You're like, what? That doesn't make sense. Like, I swear I really want to be targeting this one. And you're like, okay, it's fine, I'll move on to the next setup. You guys should understand that you will never catch the perfect top or the perfect bottoms every single time, because every single time you would always expect that you are just stressing yourself every single moment. Because I'm sure that you guys already had this idea where, for example, if you guys caught this beautiful short setup right here, you guys caught this very beautiful short setup around here, and let's say our target is gonna be around this zone. You'll target here. That's gonna be a 2RR, right? Market hits your TP, you're already out of the trade, but you're like, you hit final TP, you fully exited, and you told yourself like, what? The market just kept on going further down. I could have made this X amount of money. I want you guys to get rid of that mindset. Stop calculating the amount of money you could have made, because you have to realize that every single time you trade, you are creating a trading plan in your head, and that trading plan is the most important every single time you trade, because that trading plan that you are sticking all the way is the one that's gonna be helping you with your profitability in the next future setups. Because a lot of things could happen here. At least you exited on a logical level that can be potentially a quote-unquote a roadblock, because the market can easily just tap the level, and if the market momentum is obviously to the upside, the market can just pump going up right here and hit you on break even or hit you on an SL. So I want you guys to remove that misconception that you must be catching the market tops and bottoms to actually succeed. You guys should just focus on your trading plan. The next misconception is having high risk would actually equal to a high reward. Remember, taking excessive risk doesn't guarantee rewards, you guys. It often leads to big losses. Successful trading is about managing the risk smartly, not recklessly. When I'm telling you guys I'm managing risk smartly, doesn't mean that I'm always constantly risking 1% every single trade. Okay? Actually, no. Now, there comes a point the same constant risk every single trade is very good. I highly suggest doing that when you're a beginner. But if you guys already have your playbook, your S tier setup, and your A tier setup, your B tier setup, if you have your S tier setup, I want you guys to be risking much more on your high quality setup. The high quality setup doesn't really have to show every day. Like maybe it shows twice a week, once a week, but you guys should be risking much more into that setup, because you know that specific high risk setup might be providing you much more profit. Now you're telling me like, hey, if you are talking about proper risk management, you're not properly risking properly because you're risking more now. But you have to understand, I am managing my risk smartly because I already have a completely back-tested, data-driven setup, a data-driven playbook that I already have, where I know that the probability of this trade is maybe 80%, but it will only show up like once or two times a week. Then I know that I am managing my risk smartly because I am risking a good amount on a good probability trade. Now, I want you guys to keep that in your head, okay? That is going to be a perfect example of managing your risk smartly, not recklessly. Now, one of the most final myth that a lot of people have when it comes to trading is that you need a lot of money to be making profits. A lot of people always have the misconception where if you have a lot of money, you can make a lot of profits, even though you don't have a trading strategy yet. But if you have a lot of money, you can make so much money. That is actually wrong, because that's the thing that I always tell every single member that joins in Surge Notify. If you guys don't know what Surge Notify is, that's actually an area where I post my signals and a lot of traders posting their signals and hitting constant back-to-back wins. We're passing funded challenges, a lot of payouts, and there's also a community there, like-minded traders that wants to be profitable, that's actually sharing the entire thought process inside the community, where you guys can also discuss which trade or if that trade setup that you're actually thinking is actually actually a good setup or not. If you guys want to get in touch with me or have a lot of questions about your trading, make sure you guys join Surge Notify below. You can actually see me in the general chat sections, and I'll see you guys there. Now, going back is that you need a lot of money to make profits. That's actually wrong. Because the thing that I always tell them every single time is that if you're unable to handle a $20 account or $100 account, if you're not able to consistently turn that $100 account to a $200 account, for example, a $40 account to a $80 account, if you're not able to flip it consistently with proper risk management, 100% gain, then you're not going to be able to manage a $10,000 account to be able to flip that to 20K, 100K account, flipping that to 200K. You guys should understand that trading is a game of percentage. A lot of people would always think that they're like, okay, if I'm going to deposit like $1,000 right here, I can just take a short position here, I'll make so much money. Yeah, you can see a lot of money that you're floating in profit, but you have to remember that it's all percentage. Okay, it's really all percentage. A guy with a 100K account here can probably make, like, let's say if they're taking like what, 50% risk, for example, right? Or let's say like they're playing 2% risk, 100% account, 100,000 account, 2% risk. Okay, let's say they make $2,000 on a 2-hour setup. Someone that's trading $20 can only make $2. It's all about percentage. It's all about percentage. Stop focusing on the money you can make. Start focusing onto your trading plan. Start focusing onto your playbook. And once you got everything in check, then you can start putting in more money because you know that your probabilities are already with you. And you already know that you already have a good win rate. You already know your losses, your win rate, your playbook. Then that means that you can start putting in more money because you know that you already have probabilities by your side. And now you're able to make more profits. Always remember this, everybody. Okay, I want you guys to look. I know that you guys are having this misconception or you guys were always having this issue, but always remember that trading is a game of percentage. You do not need a lot of money at first. If you guys are refining your system, just trade with a small account. That's all that matters. Because starting with smaller amounts and focusing on good strategies is often much more effective. Because small gains can grow over time. And smaller trades help develop skills without risking too much capital upfront. Because remember this, okay, before we end, a person with a capital of $100 with proper risk management and a person that's risking $10,000 and with proper risk management as well, and remember they're both learning, guaranteed that you guys are going to be losing money. A person with $100 will lose less, and a person with $10,000 account will lose more, but they will both have the same knowledge gain. If you're still starting out in this industry, I highly suggest you trade with a small account first. Okay, small account first. Remember, it's all about percentage game. Now, this is going to be the end of this video. If you guys want to be seeing more contents like this, make sure you guys smash the like button, turn on the notification bell so you guys will get notified with our next video. We'll be dropping another video in the next few days. Make sure you guys stay tuned for that. If you have any questions, make sure you guys comment down in the comment section down below. And if you want to be asking about me and having a trade idea, make sure you guys join Surge Notify. Link is in the bio down below. I'll see you guys soon and bye-bye.